did you learn in this study? What are your clients focused on?
Absolutely. So family offices' influence in capital markets is continuing to increase. And that's really because of their size as well as the number of family offices that are outstanding. You combine that size with their framework, which is unique, and it does allow them to take advantage of unique opportunities that others might not be able to act on. In terms of what we found to be most notable were their allocations to alternatives, their interest in digital assets, and also their focus on operating businesses. So, for example, in alternatives, these clients suggested that their average allocation was about 45%. You compare that to a traditional ultra-high net worth individual, which is about 20 to 25%. But they are doing much more of a barbell also. So they do have relatively high levels of cash and fixed income. And really on the alternative side, because of the structure of not being wed to outside investors in a fixed mandate, they're allowed to, it enables them to be invested over long terms and take that illiquidity premium and also take advantage of the wealth creation that's happening in the private markets.
Meena, one of my favorite things out of this is that the 50%, more than half are expecting on reducing their cash allocation, meaning putting dry powder to work, and more than 70% are expecting to increase their allocation to equities. So what's the entry point for stocks?
Yep. This group really takes a long-term investing approach. If you actually look at the S&P over the last 10 years, if you were invested the entire time, you would have had an annualized return of 17%, total return of 470%. If you were out of the market in the best 50 days, zero. So what does that mean for this group? That means that they're looking to stay invested over a long multi-generational time period. And so this group is not necessarily taking advantage of minor dips, but to the extent that we do get a significant equity allocation, you'll see them as a marginal buyer. But what was interesting also is whether it's inflation or whether it's low interest rates, these investors are positioning similarly. Usually you won't hear low interest rates and inflation in the same sentence for an investment philosophy, but hard assets like real estate that are cash flowing and of course equities have really proved to outperform inflation over multiple years.
But since they are expecting to increase their stock allocation, are they feeling that stocks are too richly valued now? Are they waiting to buy a deeper dip in any fashion?
Yeah, I would say that they definitely have higher cash allocations that allow them to take advantage to the extent that we have a significant dip, but they're not also selling equities at these levels. I mean, to the extent that we see some changes on the capital gain side, you might see some short-term selling, but then these investors will look to reinvest again.
You mentioned real estate. When you're looking across your client portfolio, especially in the U.S. in this great migration, where are they going?
Yeah. This group has really been ahead of the investment curve in real estate. And this speaks again to their structure where they're not fixed to any mandate or investment committee that they have to respond to. And so for many years, this group has been following the demographic shift of highly skilled workers to areas that have lower taxes and a lower cost of living. And they've been investing in these niche markets and industries. And just given the amount of institutional money that's now come into these markets, I wouldn't say that they're actively pursuing opportunities. On the margin, I would say if they had the opportunity to invest somewhere more attractive, they would. But right now, they're staying investing and will continue to be opportunistic there.
Meena, one of the themes that has come up, particularly in the last year, is ESG. And I'm wondering how your clients are focused on it and how they allocate towards it when there's just no real certainty as to what that category actually is.
It's absolutely right that there's no certainty and there's really no data that people feel has really good data integrity. But ESG, like some clients don't even want to say they invest in ESG because they think it comes with concessionary returns, even though philosophically they agree with it. But it's really changed in the sense of whether it's the regulatory tailwinds, whether it's consumer preferences, we're going to see more investors invest here because, one, it aligns with their values, but also it's likely where we're going to see outsized returns. And so ESG continues to be an area, both in public markets and private markets, that these investors are focused on.
Meena, what's the approach they're taking to crypto? Does the wealthy individual have a similar wanderlust as the day trader when it comes to these digital assets?
I would say the interest is absolutely there. When you see, Bitcoin going parabolic as we did in the first quarter, it definitely, has investors asking a lot of questions. And there is, as the survey suggested, roughly about 15% of families that are invested in crypto assets and another 45% looking at it. Those 15% that are invested are really doing it prudently. So call it 1 to 3% of their portfolio. And they're viewing it as potentially an inflation hedge, just given the fixed number of coins that are out there and asymmetric potential risk reward. But the 45% investors that are looking at it, their main concern is around its store of value. Of course, regulatory tailwinds or headwinds, ESG, are definitely main concerns. But the real question is, how do you value it on a fundamental basis as you would any other asset class? And how does that fit into a portfolio? The majority of our conversations, I would say at the beginning of this year, were around the underlying coins. That has shifted. It has shifted to understanding blockchain, understanding digital ledger technology or distributed ledger technology. And that's really where these clients see a lot of opportunity, both in private markets where you can invest early stage, and then public markets that are going to take advantage of these technologies to run their businesses more efficiently.